Hello everyone, and welcome to the Teopa channel. Palantir Technologies. This company has sky-high multiples right now. For example, with a market capitalization of over $400 billion, its forward non-GAAP P/E ratio is 236. As far as I understand, this situation is causing serious controversy in the market between the bulls and the bears about whether or not there is a bubble here. So, I decided to investigate this. In my view, with such multiples, current financial indicators are essentially irrelevant. The gap between the share price and current indicators is just enormous. When you have indicators like this, only future prospects and growth potential matter. So, let's take a closer look at this company. Let's take a deeper look at the core of its business and its technologies. To do this, I suggest you imagine a large corporation. Its sales department uses Salesforce services. Logistics uses services through SAP. Production uses specialized Siemens software. Different departments have their own databases, and there is a huge number of different Excel tables with different structures and logic for reflecting information. All of this represents a huge amount of scattered, unconnected information. In such a system, figuratively speaking, the right hand often does not know what the left hand is doing. Through its Foundry platform, Palantir Technology acts as a director for all this information, tying it together into a single whole. Palantir software does not replace different programs. It overlays them. Figuratively speaking, it creates a unified, nervous system for all disparate sources of information, connecting them into a common structure, creating a so-called digital twin of the enterprise. The company has been developing this technology for about 20 years. But until 2023, Foundry had a problem. Information could be collected, but it still needed to be processed, analyzed, and understood. This was a difficult task. That's why, before the development of AI, Palantir and its technology were not as relevant as they are now. But when artificial intelligence appeared, a new era began for Palantir. AI is the brain for their nervous system. AI can process and analyze the information collected in the digital twin. The combination of these two technologies has created a truly groundbreaking service. Now, in theory, a CEO could ask, what's going on with the aluminium shipment at the port of Los Angeles? And the AI would be able to give him a full report on the problem and its consequences instantly. It could say, the 5,000-ton aluminium shipment is delayed by 4 days due to problems at customs. This will shut down Line B in Nebraska. I recommend transferring stock from the Ohio plant. This will save $50,000, despite the delivery costs. And another important thing is that with AI, companies have been able to really speed up how fast customers get hooked up to their stuff. In my opinion, this technology is really important for big companies to boost their efficiency. That's why I think this is the market, and the AI tech in the corporate world, that's gonna be one of the first to get rolled out on a big scale. I believe in this technology, and I think it has huge potential. And, of course, such a market, which implies one of the fastest and most effective ways to implement AI into the real sector of the economy, is very attractive and necessary for everyone. In my opinion, this is one of the most direct and fastest ways to monetize new technologies. Therefore, everyone needs such a market. And tech giants, primarily Microsoft with their Fabric platform, clearly see the money to be made and are already trying to enter this market. But Palantir has an advantage. As AI technology has become available, Palantir already has both technologies needed, the brain and the nervous system. Palantir does not have its own AI in the full sense, but it does not need it. AI is available elsewhere, and this market is competitive, therefore the Palantir Pe platform allows customers to connect any AI they want. Competitors also have AI, they have the brains. But competitors don't have Palantir's software, meaning they don't have the nervous system that connects scattered data to the brain. Their brains simply cannot obtain the full range of information. This creates ideal conditions for Palantir to grow rapidly and exponentially. But here I would suggest that time is working against Palantir. Because competitors will create their own version of a nervous system, an analog of Palantir's software. And taking into account that AI can help them with this, they won't have to spend 20 years doing it. Estimates suggest that it will take 5–10 years. But I think they will do it much faster, although they will probably still need several years, perhaps 3–5 years. For Palantir, this 3–5 year window provides time for expansion. The goal for the company over these 3–5 years is to capture the maximum market share and to make its customers sticky, until competitors are able to enter the market. In this light, it is very important to keep an eye on the company's quarterly growth dynamics. As I mentioned, right now, by combining two technologies, its own foundry technology and artificial intelligence, the company has opened up an excellent window of opportunity for growth. And the company's performance is growing. In the third quarter, the company's revenue was $1.181 billion. This is up 17% from the previous quarter and 62% from a year earlier. This is a good growth rate, which, if it continues, could ultimately lead to a multiple increase in financial indicators over the next 5 years. And I am sure that the company's business will grow. But of course, not everything is as good as it may seem. Although Palantir now has everything needed to grow rapidly, the company faces serious obstacles along the way. There are no perfect scenarios. Companies must quickly capture the market. But then there's the human factor. Here, we are all so smart and understand everything. Large corporations certainly want to work at the speed of thought, but they can't always do so. Human thinking is not always flexible. People have habits and distrust for new things. They don't understand new technology. Even if Palantir's technology is very helpful for corporations, that doesn't mean that all CEOs around the world will rush to implement it tomorrow. No one has abolished rigid thinking. And a significant portion of management in various companies will always adhere to conservative views. As a result, this will slow down Palantir's sales growth. Macroeconomic conditions pose another significant risk. With high Fed rates, the investment climate is depressed. Palantir's services are certainly very necessary and useful, but they are not critical for many companies at the moment. That is why investments in Palantir's services may be postponed until better times, when interest rates will be lower. These two problems can be called a brake on Palantir's business growth. Due to all of the above, if it were 2024, I would recommend buying Palantir shares. But it is now autumn 2025, and the company's market capitalization exceeds $400 billion. And there is a huge P/E forward non-GAAP of 236. And the price, in my opinion, has a very significant impact. The company is fine. But all of this successful execution, in my mind, is already included in the price. The company's shares have already factored in a 5 to 10 times growth in the company's business. But we don't know how many times the company can grow before competitors arrive. AI, together with Palantir technology, is a new market whose size is unknown. So, in summary, the company has a product for what is essentially a new and highly promising market of services for corporations, which can significantly increase their efficiency and be very useful. The acceleration of the company's growth dynamics confirms the market's potential. The company has competitors, but they are technologically behind, which gives the company a head start of several years. Actually, Palantir is, albeit temporarily, the leader in this market, which allows it to expand. However, the company is already expensive, but we don't know the limits of this new market. We don't know how much of the market this company will manage to capture before competitors arrive. All the more important is that the company's growth rate is limited by high Fed interest rates, which suppress investment, and the human factor of corporate management, which may not be in a hurry to introduce new technologies. I am sure that the company's business will grow. But the company's stock is not the business, the shares have already grown in price. This is why I recommend to hold the company's shares. If you own the company's shares, you can hold them. If you don't own them, I would recommend refraining from buying them because the shares are simply expensive. But if the US market goes into a deep correction and the company's shares also correct, for example, below $150 per share, then at that level it will be possible to think about buying. Goodbye everyone, subscribe to my channel, and please leave a like. Thanks for watching.